Boom. There it is. We got it. We got it, CK. New intro.
Oh, I like it.
If you're just viewing on whatever social media platform, you got to click in and hear this beat.
Shimmy, shimmy.
I love it. I love it. We got a good one today, CK.
I think it's a common question, and I know when we get a phone call from a first-time home buyer, it's pretty much the same thing every time.
It's almost every time. So today on this live studio recording of NMLS, we are diving into first-time homebuyer programs.
Yeah.
So it's a big one, guys. In CK, we bring it off real quick. Like almost everyone I talk to, almost every single one, we are preserving our first-time homebuyer status.
That's right.
You hear that a lot, don't you?
Mm-hmm. And what does that mean?
It's a debate, to be honest with you. I'm trying to buy my time because it's like, seriously, there's a lot to dive into because the first-time homebuyer situation can help you in some regards, but it's not as big of a fluff as a lot of mortgage professionals make it out to be. So the intention of this episode is for you to learn everything you need to know really about first-time homebuyer programs. Are you getting a benefit? Do you actually utilize those? Because one thing that frustrates me, CK, is like that whole freaking rip where people are like, oh yeah, we got so many programs.
Right.
We got that. We got that. It's going to this. And like someone that doesn't do this all the time doesn't know what you're talking about. They're just taking it for fact. It's like if you go to buy a car, right? And you go to that car lot and they're just ripping off like, we'll give you this, we'll give you that. And it's really not a benefit. It's just a sales pitch.
Yeah, there's a lot of teasers out there. And our job is to go ahead and show those programs and give, versus,
Mm-hmm.
FHA program versus a conventional with maybe some down payment assistance. What does that look like? How does that affect our interest rate? How does that get us into a home? And is it beneficial?
Right. Is it beneficial? That's the main point.
That's right.
We're going to dive in today, everybody, on tips and tricks to understand what mortgage professionals are saying when they throw out that whole
That's right.
For all those people listening on the podcast, that was a fishing reel with the sound effect added of the line going out as bait.
Yeah.
So I really want everyone that subscribes to our podcast, the huge audience that listens, to understand, depending on which lender they choose, CK, it's like you need to understand and be armed with the facts so that you aren't misled down a road and thinking you're getting this incredible deal and program. So once again, just to break down everybody in the sense of an intro, this is the MLO podcast. We are live streaming on Facebook today. I've yours truly, Nett, and then of course your mortgage guru,
CK, Christian Kemp.
CK in the house, and our beloved Casey Carpenter is at home with the kiddos on kid duty, so we don't have Casey today, but I know he's here in spirit.
That's right,
as always. So we like to remind everybody, check out our podcast. I am subscribe, follow. There's a lot of great content on there. We're close to about 25 episodes now, breaking down a lot of different great subject lines that can help you if you're planning to buy, sell, or even your industry professional looking to gain a little more insight on the lending side, right?
Yep.
CK?
Correct. So going into this episode, we want to really dissect what that means to be a first-time home buyer. If you haven't owned a home in the last 3 years, that's really what provides you with that status, so to speak. And there is some programs out there that can help you. Mm-hmm. But like we said, is it beneficial?
Yeah. Is it beneficial is the main rip. So one thing that I want to break down right off the bat is if you're a first-time home buyer, you do have a unique opportunity to have a reduced minimum down payment for a conventional loan. So if you haven't watched any of our videos on YouTube or listened to other episodes, it's your first time, go check those out because we might use some terms that might be new to you if this is your first episode. But that being said, as a first-time home buyer, you are open to doing a 3% down conventional loan, which is a huge advantage for a lot of people. However, I think one of the biggest misperceptions, CK, is going that reduced down payment really a benefit to you?
Right.
Because there are some what we refer to as adjusters when it comes to the terms of the mortgage, right?
That's right. So there's adjusters to interest rate or to fees anytime when the down payment level goes down, as you put down 3, 5, 10, 15, or even 20%, we're seeing those adjusters go down and get you into a better light with with mortgage insurance too. So there are some programs that will help lower mortgage insurance with the first-time home buyers, and we'll discuss that in a little bit more detail. But and then you got your FHA loans too, and a lot of people take advantage of, myself included. When I first bought my house in 2003, that's the avenue I went with. It was 3.5%. My credit wasn't the best, being a young person that made a lot of mistakes earlier, but it was a spot where I can go ahead and put down 3.5%, take advantage of the low interest rate that FHA does provide, not penalizing you for some challenge credit maybe. And then, refinancing that down the road into a conventional.
Yeah. Well, that's great detail. I want to throw out, really, it's just on my mind, and I want to break it down because we do get so many calls where it's like, hey, I'm a first-time home buyer. I want to take care of first-time home buyer programs. And I think full transparency, most mortgage professionals are just going to say, oh, we have tons of those programs, or we have this or that. And really, from the perspective of the mortgage advisor, a lot of them just want to tackle some low-hanging fruit to make it attractive to work with them. For example, like interest rate and then monthly payment.
Right.
And I think at MLO, we do a really, really, really great job at breaking down the details and educating our consumers. So one thing to know when it comes to first-time home buyer programs is just because they call it a first-time home buyer program doesn't mean you're getting great terms, Christian. Right. So like one very, very common program is a particular FHA with a secondary loan, which is actually the down payment financed, and not a lot of people understand that. So it's not necessarily free money.
That's right.
And there's a lot of fine print terms that people don't read.
Right.
Like, that, I know that, but not everybody does.
If you didn't do this every day, there's no way you would know that.
There's no way.
And even if the lender's not doing those monthly, they're not going to probably provide you with all that information. Yeah, it's in some fine print in your disclosures, but we want to make sure that you understand those completely.
Yeah, for sure. And one example on the fine print is like, I read a couple different programs that I don't participate in as an originator, but they were saying that if you ever refinance or sell the loan or sell the house, you have to pay back the money.
Yeah.
And there's people out there in this industry who won't even disclose that or explain it. And there's so much fine print that gets overlooked. So I think that's one of the entire motivations is you really do need to work with someone that's going to educate rather than sell.
That's right.
I think that's super important.
I agree 100%. When we're sitting down with a first-time home buyer, yeah, I believe some of those programs are awesome for some people, that really need to get into the house, maybe has the income to afford the elevated payment instead of really having that down payment and really saving for that. But I think having skin in the game is huge, actually going through the saving side of things or getting a gift from a family member that that they're investing in your future as well. It makes you a little bit more responsible and taking care of that property and the mortgage and everything else that goes along with it. In 2006, 2007, we saw a crash when we didn't see those programs. We had a lot of 80/20s where people did not have skin in the game, and it was easy for those people to walk away from it. As we invest into our properties, it's so financially important to make those monthly payments, stay on top of it, stay on top of the property, so you don't have deferred maintenance and everything else. It's just part of the whole program.
Yeah. Great point. I think transitioning to another bullet point is what to watch for when a program's being promoted, right?
Yeah.
So it's like I get these calls and they're like, so and so said I could be on this program and this program. And it's like they don't know what the program is, they don't know what the benefits are. So I want to break down what to watch for. A lot of common first-time homebuyer programs are FHA loans backed with that secondary loan to pay for the finance. So it's not necessarily free at all. There's fine print, but also there's a big distinguisher between being under over what's referred to as income cap.
That's
so
right.
that's one thing to know. And that's something you can Google is area medium income. And that's a real tidebreaker when it comes to knowing if you qualify or don't qualify for certain programs. But just to give you a little frame of reference, like one product that I'm familiar of that's very popular, at least in Oregon, it's that 1-2 where the first is an FHA loan and the second is financing in the down payment. However, that particular program not only has a 1.75% funding fee,
Right.
just about every lender, whether at my friend's company or other people, we know everyone in this industry for the most part, they add an additional 1% origination fee.
That's
which
right.
is, when I say 1%, guys, that is 1% of the amount borrowed. It's a $300,000 loan. You would have an additional $3,000 closing costs added on to the total terms of the loan. So if you're doing a 1.75% funding fee, because it's some product, and then a 1% origination fee, I mean, conservatively speaking, CK, we're negative 2.75% in equity before you even get keys in hand, and you're tied to repaying. So that just really hits me. I know we're shooting real off the cuff with the content here, but I really want people to know, like, when you're out interviewing loan officers, looking at whom advisors might be the best fit for you, don't be fooled by the short-lived, like, oh, we have this program, we have that program. You really got to understand the terms. So bringing it back to what are, on a positive note, some of the favorite programs that I like. First of all, in my opinion, you have a clear distinct dividing factor of either FHA or conventional.
Right.
You're either going one or two of ways. So watch some of our older content on the difference between FHA and conventional, right off the bat, if you haven't. But if you are in a position to qualify as a conventional loan, I would advise somebody taking a couple of months to get into that position, whether it's credit, eligibility, income,
Down payment,
work history, and try to be in that conventional loan. There are some really great products, and I'll get to that, for conventional specifically. But within conventional, we've got mortgage insurance, which is removable, versus on FHA, which most first-time home buyer promotion programs,
right.
unless you have 10% down or more, that mortgage insurance stays on the loan for the entire 30 years of a 30-year fix. No one talks about that.
Yeah, and we're in such a great rate environment right now. I mean, we don't know 10 years from now that, we're looking at 8% interest rates, and you're still stuck with that mortgage insurance, $180 that just will stay on there for 30 years of the loan.
Mm-hmm.
So yeah, we want to make sure that if they're close to that conventional side, if we can get them there, that's the route we want to go.
That's the route we'd prefer. And no, I don't want to discredit the people.
Not at all.
Everyone's got their own storyboard. Everyone has unforeseen life events. They have credit events.
Yeah.
We all have that, where FHA might be the best situation for someone. I just really get discouraged when there's industry people who push for the shorter close.
Yeah.
Like, oh, we'll just get you in this program, no problem. If you're hearing fast talk like that, we've had that so many
that's
times.
why we started this whole MLO team, is because we were tired of our clients coming and getting some misinformation, things not being transparent out there. So yeah, that's our goal, is to get this information out there, give you all the facts so that you can make an educated decision on which way you want to go.
Exactly. And going back though to CK, I'm trying to bring it all around, is that conventional program. The programs that I really like, there are two main ones, which are conventional ones. It's Home Ready and Home Possible. Yep. And I really like those. The only requirement to accomplish and qualify for those from an educational standpoint, meaning effort outside the loan, is a homebuyer educational course, which is all done online. It's zero cost now. It used to be $75. Right. They changed that this year. Those programs are capped at what's called area medium income. Yep. So for where we're physically located, Portland, Oregon, most counties and neighborhoods are capped at about 72 grand household income or applicant income. So if you exceed those and you've got a loan officer, CK, who's like, oh yeah, I'll get you in the first time home buyer program, and you're making over the area medium income, they're not being honest with you. Yep. They're just trying to promote you. And this is a really thin ice situation to chat about, because personally, I do not like it from a promotional standpoint when people are like talking crap about other industry partners, or they're doing it this way and fooling you, but it's true. And I think it's one of those subject lines that really can't be undermeasured. You know, you gotta know that these people want to sell you. And we're one of the few teams out there really that take that educational approach and what's best for the client, what's best for the family approach, because the rest of them really just want to slam, bam, thank you, ma'am. Right.
Right. Yeah. I think, back to that relationship side of things, you want to know and trust that advisor that's putting you into your first home, your second home, your third home down the road. This is like the relationship that's going to last for a lifetime.
Oh, 100%. And it's such an important piece to the home buying process. Yeah. And I just feel really compelled to bring up to people. It's like, we do so many of these intro phone calls, intro Zoom calls, and the person that you're talking to, especially if it's not a representative that has your best interest, just wants you to do the one with you. That they're compensated for their performance base of how many loans they close, how many conversations they have, versus really hearing the big picture goal. Because the promotion doesn't always serve to be the best benefit, and you have to detach yourself from the concept of lower interest rates better, lower payments better, because it's not always true.
That's right. So while we set you up to succeed through our different applications, and we're giving you different worksheets to see all different levels of programs out there, you are going to be, educated and knowing exactly what you're coming to the table with. You're going to know that, hey, 10 years from now, this is still going to be a good product for me, or you're going to have a game plan of how to execute on your next refinance or the next house or whatever it may be. That's the whole goal, is to get you in that house. Yes, but we don't want to bury you in the house. You know what I'm saying?
You don't. And I mean, I even have this conversation with people all the time. It's like the last thing I want any of my home buyers to do is get into that home and feel completely strapped, like they've got no more money. And you'll hear a lot of mortgage professionals say like, oh, don't worry, you skip a payment or this or that. And we talked about that, about prepaid interest and all that, try to alleviate that stress. However, and there's a lot of different factors to consider, like making the house your own, decorating, adjusting to utility expenses, things of that nature. But I think in conclusion, CK, we can bring a lot of value from this episode to our clients nationally in our audience, just to what are like 1, 2, 3 things that if they're having that first call, what can you ask? Like first and foremost, I would say, if you're in a conversation with a mortgage advisor and they're pitching you first time home buyer, what are the terms of repayment? I think that's a great great question that anyone can take away. Well, on that free money, what are the terms? Because it's freaking America, dude. Nothing's free, right?
Usually not.
Usually not. So I think if they're taking away home right off the bat, you got to know, like, you can say, what are the terms on that?
Right.
On that repayment? Is it free money? Can you copy that and send that to me? Can you send me a link for the product specifically? So what else comes to your mind?
Yeah, that's the terms of the program is going to be huge. And is there mortgage insurance? You know, what is that for the lifetime of the loan, or can it fall off once I meet that 20%?
That's a really big one, and not a lot of people know that FHA loans, I noted this earlier, FHA loans don't allow for removal of that mortgage insurance premium unless you have 10% down or more. And not a lot of people know that.
Yeah, and it used to be. So a lot of people, gotten accustomed of using the FHA loan and being able to get that dropped. We, had a lot of years where we saw, equity grow, 7, 8, 9, 10% a year. So an FHA loan
and
was
they just
great.
didn't care.
Yeah, because you can get a really low interest rate, know that in 2 years I can get this MI dropped, right? FHA got smart with that. They're like, we're not going to be used as a tool. We're trying to get home buyers into homes and get them to the next step. They want to open that money for new home buyers. You get it back into conventional.
Yeah.
And then that's the revolving door, but that's no longer the case.
That's a good point. And I would like to say too, a new consideration with interest rates being so low, it's a different perspective. These might be notes meaning loans that you do want to carry for decades.
That's right.
I mean, we are in incredibly low interest rate markets, and I even still hear grandparents and parents talking about the 7 to 15% APR type of situation. Now we're in the 2, 3, 4s depending on product and credit. Like, these are actually notes that you want to retain and keep for like generations. So it does play even a bigger role versus, like, say, even a year and a half ago, Christian, where interest rates were 1 to 2 to 2.5% higher than they are now, depending on product and credit, of course. But there was a preconceived assumption that you would be refinancing it.
That's right.
But now, no, totally different perspective. So it plays a bigger role. For example, back to the removable mortgage insurance. How much would it stink if you bought a home? You're like, I'm dedicated, family's driven. I'm going to fill these rooms. Everyone's going to be together, and we're going to be here this is our dream home. You hit year 10 and you're like, oh, I probably should be right around that time that maybe my mortgage insurance would fall off. And the company you talked to was like, oh, sorry, that's for the life of the loan. And your advisor did not educate you on that or explain it. So it just really hits home on transparency to me. So knowing the terms of the program that you're getting into would be the first takeaway. Secondly, I think don't get confused. Don't be tricked by interest rates from FHA to conventional, because that's a bait used often by mortgage professionals. It's like, oh, I'll get you in that 2.5 or 3.25 rate, 4 point whatever rate, like lower than what your credit score and down payment would typically allow for. So they're pitching an FHA rate that's not consistent, and they're adding in discount points, origination fees, all those closing costs. And you think the whole time while you've been talking to this representative for 1, 2, 3 months or weeks or however long, that you've got your person.
Right.
You got your person. Oh, yeah, the best rate, blah, blah, blah. But you haven't seen that breakdown of spreadsheets, that itemized fee worksheet. And I would say to our third note, because just to recap it there, we've got the program and the terms. Don't be fooled by the rate. Understand what program you're getting to. But thirdly, don't be in a rush.
Yeah.
Don't be in a rush. And it probably gets exhausting to hear us say it's never too early to start a conversation, but the advantage is you're doing research and you can pull back the layers to the onion, if you will. You can start learning like, oh, okay, well, great. I'm glad that you Billy Bob, I'm glad that you are the best in the West or wherever you are in the country. But can you send me a breakdown of all those costs summarized
That's right.
and view that? It's super, super important. Look for those origination fees. Look for the government funding fees if you're on one of those programs, and really dive deep into what the details are.
Yeah, and understand mortgage insurance. I mean, if
It's
you're
a big
putting
one.
down less than 20%, we want to do a deep dive with you. you
Yeah.
know?
Well, and just to kind of conclude too, as a little added bit on the mortgage insurance, understand FHA is a flat rate. So it's broken down between primarily how much of a down payment. There's buckets, so it'll reduce, but that's the only factor when it comes to FHA monthly mortgage insurance. However, conventional loans, Christian, are more dynamic. They bring in credit score. They bring
100%.
in reserves, how much savings you have. Are there one or two applicants, and that can adjust your premium quite.
And you got
Quite
different companies out there wanting your business. So they're fighting for our business in a sense. We get to shop it through 5 different MI companies versus FHA. It's just flat.
It's just flat rate. And I think in like to the point, ending with the MI, the mortgage insurance situation is, if there's a way that you can improve your credit score in a short amount of time and get into, say, a conventional loan or better terms because you took 2 to 4 weeks to maybe adjust a few things, that is completely worth waiting and not being pushed into. So just know that, and it really hurts my heart to say this, but like most people just want easy peasy from the one side. They just, put it in, blah, blah, figure it out, rather than really diving deeper into the details. So when it comes to any questions, financing your home, the whole MLO team here is dedicated to supporting people the right way. And we truly do push that initiative all the time.
100%. That's what we're about.
That's what we're about. And to kind of bring it in, our new freaking intro, outro, I really like it. It's good stuff. It's good stuff. And I just like to remind everyone, this is a live streaming podcast. We are located wherever you get your episodes, but we're also conveniently located right here.
Right here,
Facebook. We're up and going. The YouTube channel will be here hot. Please subscribe, comment, whatever you can do to support the channel. But if we can help you in any sense, reach out, right?
That's right.
We
We're
got the
here,
VIP
100%.
number.
VIP.
Do you remember? 503 VIP 9038.
Gosh, I should have known that.
Casey's got to memorize real quick. I still got to think about it twice, but we always got your back when it comes to residential lending, and we are a safe place to talk, hear,
All your
learn,
questions.
educate.
Yeah.
Text, call, whatever you got. We got you when it comes to your next home. And till next time, right, TK?
Till next time, the MLO team here for you.
We're out.